All right, let's talk about this MSCI story. So on November 18th, JP Morgan analysts flagged that Strategy's stock MSTR risks delisting from MSCI indices due to a proposed MSCI rule. And that's from an October 2025 consultation. So MSCI, that's Morgan Stanley Capital International, and it's a major global index provider. So MSCI indices, so they create these benchmarks like the MSCI USA and MSCI World indices, and they track about 85% of US stock market. Trillions of dollars in passive funds, like from ETFs from Vanguard or BlackRock, they automatically buy and sell stocks based on these index. So inclusion in the indices boosts liquidity and valuation. Exclusion triggers for selling. Now, the proposed rule would bar companies from being included in the indices if digital assets like Bitcoin exceed 50% of the total assets held on the company's balance sheet. So the rule would be classifying these stocks as investment funds or holding companies rather than as operating businesses. That's the grounds for excluding them from the indices. JP Morgan estimates that $2.8 billion in outflows would result from MSCI-linked funds being excluded, and up to $8.8 billion in outflows if all the other index trackers follow suit. Note that these outflows would be from MSTR stock primarily, not from Bitcoin itself, so not directly affecting like Bitcoin holders. But as it relates to the price of Bitcoin itself, forced MSTR stock selling could create downward pressure on BTC as the company might liquidate holdings or face margin calls. I think people have, however, noted that that's an unlikely scenario. Michael Saylor holding on to his Bitcoin, the structure of it isn't likely to be such that he actually has to be a forced seller. However, there is a broader fear, which is that this rule change could chill corporate BTC adoption as firms weigh index exclusion if these indices institute this rule against the potential advantages of holding in Bitcoin on their treasuries. So that would potentially slow down the purchase of Bitcoin by publicly traded companies and put a damper on this whole narrative of Bitcoin's TradFi integration more broadly. Just closing this story off, the final decision for MSCI's rule change is expected in January, about January 15th. If enacted, it could cascade to other providers like FTSE, Russell, and S&P, which would affect the broader Bitcoin treasury firms.
Yeah, I mean, first of all, I think that what the biggest result of this would be is that the tailwinds this provided earlier in the year, that kind of probably doesn't come back for the remainder of this cycle. Right? It might come back further down the road, but basically you wouldn't really have like the major DAT plays happening for a long, long time then, right? The second comment I have is, this kind of makes sense to me, to be honest. This felt like a little bit of a loophole, the whole DAT thing, being able to kind of be included as a real company, even though it is basically like a holding company, right? It's just sitting there holding a bunch of assets. So I don't know. I'm not like upset about this rule. I don't think that there's some cabal that's maybe trying to torpedo crypto or lower prices or something like that. It just kind of makes sense that you would protect what the indice is supposed to be doing, which is supporting companies that do stuff, real businesses. Yeah.
Yeah. So it does seem like a sensible rule change. Michael Saylor, of course, shot back denying that that Strategy is just a holding company. He's basically saying that it's far more than that, pointing to all the derivatives that exist on it, like STRK and on, and that it's not just passively holding Bitcoin. It's doing much more with it than that. So therefore, it should be excluded from this. That's his defense. We'll see.
I think the more interesting thing for me is some of these DATs, like the Solana, I would say in particular Solana or Ethereum, maybe even some of the alt debts like hyperliquid, they are much more active, and I think they can even buy or invest in other businesses. They can earn revenue in a more direct way. And I wonder if they would be excluded just as a general rule. I mean, because it says 50% of the total assets exceed. So I don't know. It's an interesting thing though.